Okie dokie. Okie dokie, everyone. Can I start off by saying either a good morning or good afternoon or even a good evening, depending on where you are around the world. And thank you and welcome for joining me tonight on tonight's webinar for Stratton Markets. And tonight's episode is called How I Learned About the Different Chart Patterns, Part 1. Written by myself, of course, which is James Trescothick, and I'm the Chief Trading Educator here at Stratton Markets. Now, before we move on to an introduction of myself and a rundown on tonight's agenda, don't forget, we're talking about online trading and CFD trading. And like with all types of investments, it does indeed carry a great deal of risk. So I do suggest you do your own research and your own due diligence and know the risks at hand before entering any trade. Now, with that out the way, this hairy, wrinkly, sort of potbelly type person actually is yours truly. Like I said, my name is James Trescothick, and I'm the Chief Trading Educator here at Stratton Markets. I have over 20 years experience in the financial service industry. I actually started off as a mortgage broker, where I actually started with commercial mortgages, buy-to-let mortgages, before moving into pensions and alternative investments, before finally entering the arena of trading around about 14 years ago. I do trade myself, and I have traded myself for several product companies. Ran a floor at the Philippine Stock Exchange, traded gold options with the Dubai Gold and Commodity Exchange before going into portfolio management and obviously into education. I'm indeed a published writer, and I've been published in several leading industry publications, including the likes of the Financial Times Advisor, Market Watch, which is the Wall Street Journal, and several other sort of publications, newspapers, things like that. And I'm a very avid market commentator. One thing I will say is I'm very passionate about the markets. Sorry, a little sip of my coffee. Very passionate about the markets. And I'm often being asked for sort of opinions and ideas where the market's going. And I'm a well-known public speaker. I've spoken several events around the world, including the likes of Singapore, Hong Kong, Dubai, Kuwait, Jordan, Berlin, London, just to name a few. And as you can tell, obviously, I'm a Brit, so London and Manchester actually features. Now, I am an educator, but what I will say is this. I'm not like other educators out there who say, I'm an expert. I would never call myself an expert. What I call myself is somebody who understands and has a good knowledge of trading in the arena, okay? So I'm not going to give you the magic answer or the holy grail, because it doesn't exist. What I give and what I share is ideas and knowledge and obviously the education. So you can take it away and yourself form your own path, your own pattern. Okay. I'm not like the guru who's going to tell you, right, the secret answer, the golden ticket. It's not what I do. What I do is I show you my experiences, my failures, as well as my loss, as well as my successes, with the idea that you can learn from me or learn from what I have to say, and you go on and hopefully achieve a successful trading career. Okay, so I'm saying that from the beginning. So tonight's episode is, like I say, about chart patterns. So we'll discuss chart patterns, and then we'll discuss trends and ranging markets, how these patterns we can see. Then we'll discuss the double top and double bottoms pattern. Sounds a bit rude, but it's not, don't worry. Then we'll talk about head and shoulders. So it almost sounds like a shampoo commercial then. And then we'll do a little brief introduction to triangles, because I'm going to do another episode purely on triangles later down the line. Then I'll do my usual question and answer session at the end. So if you have any questions about the topics I'm talking about, please try and hold it off to the end. Chart patterns. I mean, let's think about it. Okay, we look at charts and we see sometimes it looks very pretty, a lot of green and red, candlesticks. Okay, but if we look closer, we can actually see a lot more. We can actually identify potential movements or potentially where an asset may go next. Put myself on camera now. Get around. Yee. Oh my God, I look like a disheveled British politician, so forgive me. So if we look a little bit closer, we can actually see a lot more than just that. Okay, so it's a case of identifying these patterns so we can see what these patterns are actually going to be showing us. Now, the market can tend to be two things. It tends to be on a trend or ranging. So let's go over a trend first, what a trend looks like and what is a trend and how we can identify a trend and how we could possibly identify potential entry and exit levels. Now, life would be really easy if the market just did this, went straight up. Or if we were shorting or selling, the market just went, oops, straight down. But it doesn't do that, does it? Instead, what we see, the market tends to do this: up, down, up, down, up, down, up, down, up, down, or down, up, down, up, down, up, down, up. So it doesn't really, like I say, you know, it's not as easy. So, even if it's going up, down, or up, down, up, we can still identify potential patterns and things of this nature. So when we're identifying patterns or chart patterns, we can often use what's known as trend lines. Now, a trend line is a line which is connecting two or more lows or two or more highs to indicate future price movement. The theory is that if the two lower lows and two lower highs, if we're seeing two lower lows and two lower highs, this is potentially indicating to us that that asset is on a downtrend. Whereas if we're seeing two higher highs and two higher lows, then potentially this is indicating to us the asset is on an uptrend. Now, like I say, when they're looking at patterns, traders tend to draw in trend lines to try and identify if the asset is indeed on an uptrend or a downtrend, and to help them identify potential areas of interest. So like I say, this is what, as we discussed in the previous slide, this is what an asset tends to do. It goes up, down, oops, up, down, up, down, up, down, up, down. Now, what traders do who use trend lines, what they tend to do, they're then trying to draw a trend line connecting the lower lows if it's an uptrend, or connecting the lower highs if it's on a downtrend. So they simply, like I say, draw the trend line themselves. Now, here we go. This is an example for us. This is actually the British pound against the US dollar on a 1 hour. Okay. Looking at it straight away, you go, right, okay, there's a lot of green candles, red candles fluctuating up and down, etc. But if you actually then draw a trend line on it, connecting the lower lows, then you can see potentially that on this particular time or moment, the British pound was indeed on an uptrend against the US dollar. And now while we draw these trend lines as well, because then we actually identify potential support levels, and those who knows who support levels means where an asset will drop to, hit, and then bounce back up in value, we can identify potential support levels, which then means we can then get ready to jump into the market. So say, for example, we can see here and on this trend line, indeed, the British pound in this slide was moving up higher, was in an uptrend, and every time it hit the support or the trend line, it bounced back up. So then, of course, if we've drawn our trend line, this would be the next area of interest we will be keeping an eye on to potentially see if that's going to indicate to us a chance for us to jump into the market. And again, here's another example. This again is the British pound again. This again is on a daily. See, again, we draw the trend line on the low, looking at the pattern, connecting the lower lows. So again, obviously, then we would be looking at possibly this area as an area of interest for potential future price movements. And again, another example. Let me say, again, another example of a potential trend line like that, connecting the lower lows. Now, here's the thing to remember when you're looking at chart patterns and you're trying to identify an uptrend or downtrend, trend lines can only be drawn when there are at least two lower tops or two lower bottoms. And the steeper the trend line is, the less accurate it's going to be. So if you try and force it, it's not going to be very accurate. And like I say, you should not force it. You should really be drawn based upon what you see, not what you want to see or what you think. And again, this is an example of a downtrend. Again, lower highs. Okay, lower highs, lower highs, lower highs. Again, this is the euro sterling on a daily. Okay, lower highs. So again, we know that this is the level potentially, as we can identify on a daily in this particular slide, the euro against the sterling was on a downtrend. We can tell, well, that trend line was potentially indicating us a resistance, which meant an area of interest we, if it does indeed hold, could potentially sell from. As well as a trending market, my little coffee. As well as a trending market, what the market, and more often does this between breaks, is the market tends to go on to what's known as a ranging market. Okay, and a ranging market is when an asset is trading between the same highs and lows for a good, a number of times, for a good period of time. Okay, and the ranging market can be sort of defined when the asset is trading between the same support, it is touching and bouncing off, and people are buying in again, and the same resistance, where it's coming, touching, acting like a ceiling, and the market selling again, for at least maybe 3 times or more. Okay, so if the support is being touched 3 times, the market's buying in, or the resistance is being touched 3 times and the market's selling, then you can sort of really tell that maybe currently that asset is indeed in a ranging market. So it looks a little bit like this. Up, down, up, down, up, down, up, down. So there, you know where the market is buying in from. And there, you know where the asset or the market is selling the asset from. So it's a ranging market going between 2 levels. And to do this, and to identify this, you draw what you know as channel lines. Okay? And again, you do it with the naked eye. You see where the bottoms, when the market is buying in, and you see where the market is selling from. And then you know potentially where to possibly buy from and where to potentially sell from on that asset. Of course, like I say, all levels eventually are broken, like it is here. And then this is the rule, okay? If a resistance is broken, and then the asset touches it and buys in again, that resistance has changed its role. It's become a support. And then you know that level is definitely broken because the market's buying in. If that support is broken and the market starts selling from that support, it's changed its role. It then becomes the resistance. So this is something, again, you need to sort of keep on top with and get ready to identify. Here's another example. Okay. At this point, this was a resistance level. And the market was selling from. See, it was selling from it. So it was touching it and it was selling it. Then it broke. We had a new resistance. And what did we see? It come back down, touch what used to be a resistance, now becomes a support, and the market then jumps in and starts buying from that level again. Right, other patterns to identify. Okay, we're talking about ranging and trending markets, but there's other things we can identify. Other little patterns. One is called the double top. Okay, now this chart pattern is a reversal pattern, and it tends to occur when there's been a extended move upwards. So when the market or an asset has gone up quite high, quite rapidly. Okay, like that. And what it does, it then forms 2 tops. The so-called tops are created when the asset hits a certain level and sells off again. If it then bounces back up and touches that level again and the market sells off, potentially we are then seeing what's known as a double top pattern. Because then what we're more interested in, if we are seeing that, if we're seeing a level where it's actually like a minor support, which we call a neckline, and we see the double top, remember this has got to be on an uptrend, so it's got to be quite a dramatic move up and then form these two double tops, come down and touch the neckline. What we're then waiting for the market to happen is for that neckline to be broken and the market to reverse and sell off from where it sort of began from. Now here's an example. This is the dollar CAD. Okay, one double top, another double top. So again, clearly touching that level, but we noticed there, okay, this time when the market started, that's a potential neckline. So we're waiting for it to break, and indeed, my face out the way. I can't get my face out the way. As we can then see, the market did indeed sell off and break that neckline. So this is the pattern we were looking to try and identify. Let's do another example. This is the dollar Japanese yen again on the daily. So we have had a big move upwards, touches one top, creates another top, identify a potential neckline, wait for the market to react and break a reversal, and indeed the market reverses and starts to sell off. Opposite to this, of course, we then have the double bottom. And surprise, surprise, the double bottom is the exact opposite of what a double top is. Okay, it's the opposite. This time it's a downward trend reversal pattern. Okay, so traders look for this pattern to potentially look for an opportunity to go long. So you see it's something, again, it's got to be quite a dramatic move downwards. See that reacts, the market starts to buy in, forming one bottom, then second bottom, and then we're waiting for the market to then reverse and start to jump back in and force the asset up. This is euro dollar in 1 hour. So they would take myself off so we can see the chart properly. Okay, so double bottom, double bottom, double bottom. Realize there's our neckline, and then indeed, of course, the asset breaks through that and reverses that downtrend. Here's another one. Oh, hang on. Yeah, so that reverses that pattern. Now, here's another pattern worth talking about. And this again is very famous. It's not a shampoo ad. Okay, it's not a shampoo ad at all, though it does sound like one. And this is called the head and shoulder pattern. And with this particular pattern, what you look out for is when an asset does something like this, goes up, continues to move up higher, spikes like this, moves down, so it creates what's known as one shoulder, then creates like a head, then creates, sells off, and then bounces and creates another shoulder. What we then are able to see is the neckline. And what we're happy to do when it's on an upward trend, when it's on an up head and shoulder pattern, what we're then waiting for is for the asset to break below the neckline. So we're looking for this pattern, try to identify this pattern. So then when we see it, we potentially know where the neckline is. So then we can potentially get ready to short that asset if indeed that neckline is broken. So this is what a head and shoulder pattern looks like. So here's an example. This is the euro dollar on a daily. Shoulder, head, shoulder. There's the neckline. There's the other shoulder here. There's the neckline. So around about here, we can say it's bounced back up a bit and we're getting ready for it to move down lower. And indeed, that's when the asset breaks through the neckline and goes short. So this is what the sort of pattern we're looking for to give us a heads up that maybe this pattern's forming and we should get ready to maybe jump in and do the short. Here's another example. This is British pound US dollar on 1 hour. Shoulder, head, neckline. Waiting for another shoulder to form. Yes, another shoulder is formed. So this time we know that if it breaks through the neckline, then we are indeed in for an opportunity potentially to go short on this asset. Another example, this is the US dollar Japanese yen. This time I've actually drawn the lines in. Shoulder, head, neckline, shoulder, and then this is when we're getting ready for the neckline to be broken and for us potentially then to jump into the market and do the short. Now, again, I'm going to be doing a whole different episode, a whole big episode on triangles, chart triangles later down the line. But for now, unfortunately, animation is not working. I want to introduce one particular triangle pattern. Like I said, I will do a whole episode on this. This is called the ascending triangle. Now, this type of pattern occurs when there is a key resistance level and the asset has been moving up with a series of lower lows, like we've looked at the trend, but it's maintaining at a certain level, a certain resistance level. And for example, the asset's going up, but it keeps touching this one level, which is keeping it down. But at the same time, we're still getting lower lows. So it's like in the triangle. And like I say, traders look at these for this pattern for, again, a potential shorting opportunity. So it looks like this. So it goes up, lower lows, like the uptrend, goes up. But as you can see, it keeps touching a particular level. It can't quite break it, even though the lower lows, though, the asset's not falling as low as it should be. So it's not like in a ranging market. It's doing this, doing this, doing this, but it's still the same level it's touching. Because then what we'll do, we can actually then design, like I say, an ascending triangle like this. We can then connect a triangle. Because then what we're waiting for is for it to touch that level. It can't break. It's been trying to break, because then we potentially could see that the market is getting ready to sell off and it reverses, breaking below that triangle level. And that could be potentially a shorting opportunity. Now, here's an example. This is the euro dollar on 1 hour. Okay, so we have our lower lows are ascending. Okay, but at the same time, our higher highs are being capped around here. So we know that even the asset's going on an uptrend. Every time it gets higher, it's being kept at this particular level. So it allows us to form an ascending triangle. And hey, presto, indeed, eventually the market gets exhausted trying to push higher. It breaks through and becomes a shorting opportunity. Here's another example. This is a British pound, US dollar, the cable on a daily. Again, we can draw our trend line, okay? But as we can see, every time it's touched, again, it's hitting a level which is keeping it. So we're able to form an ascending triangle, which tells us the market may be running out of momentum and it may be getting ready to short. And indeed, what happens? The market then sells off. Right. Up and coming educational events, other episodes to come out this month. This includes on the 12th of February, it's how I got to understand the different market environments. Then on the 19th of February, I've got how I got to understand the different currency crosses. That's a good episode because I will be discussing about minor currency pairs. A lot of people just tend to focus on the majors, but there's some great opportunities with the minors. So we'll talk about that. And then, of course, we're then on the 26th of February, the final episode for the month. It will be how I got to understand the Elliott Wave theory. Cracking one, that one. I like talking about the Elliott Wave because I think it's a really interesting theory. And you can certainly use it to recognize certain patterns and certainly see where the market potentially could be heading in the future. So that's on the 26th of February. If you wish to reach out to me, speak to me, by all means you can. My email address is james@strattonmarkets.com. Or indeed, you can direct message me or indeed follow me maybe on my Twitter account. My handle is @Trescothick. I often publish or tweet. They call it tweet, don't they? Tweet. I often tweet market developments, or, in my typical comical fashion. So by all means, that's my Twitter, which is @Trescothick. Before I go into questions, don't forget I've been talking about CFDs on online trading. And like with all types of investment, it does indeed carry a great deal of risk. I do suggest you do your own research and your own due diligence and know the risks at hand before entering any trade. With that out of the way, I'll go to any questions at all. Any questions for anybody? Anybody like to ask me anything? And if I know the answer, I will certainly answer it. If I don't, I'll look it up. Joking. Any questions at all? And if you'd like to ask me anything. Honestly, don't be shy. I won't bite. I'm generally quite nice. Though I definitely do need a haircut. I know I will. I promise next week, ladies and gents, I will have a haircut. So I'm trying not to look so much like a disheveled British politician. I'll try my best. Okay. Did everybody find it useful, though, or interesting? Did I go too fast in segments? Is there any slides anybody wants me to go back over? Or did everybody sort of make a little bit of sense and go, oh, actually, it's really helpful. Thank you. Everybody enjoy it at least. Did you enjoy it? Or are you sick of my voice now and you've all gone to sleep? Okay. Oh, very interesting. Oh, Esteban, thank you. Well done. Oh, thank you, Alex. Very interesting. Well done. Thank you very much. And thank you, Esteban. Very interesting. I appreciate that. Thank you, guys. And helpful. Brilliant. I'm glad. Because like I say, at the end of the day, I do my best to try and write this material to try and be as helpful. Like I said at the beginning, I'm not here to give you the secret answer because all trading is personal. Okay. You have to find your own path that works for you. If there was a holy grail of answers, everybody would be a multimillionaire. Let's face it, not everybody's a multimillionaire. Okay. So, and like I say, your trading styles have to fit your personality, your lifestyle, the way you are. That's how I try and do it. Very simple, just in the real chart. That was the best. Oh, brilliant. Thank you. Well, I tell you what I like to do. Actually, here's a question. Maybe one of the episodes out there, perhaps we'll do a live chart. Because I know, obviously, because what I tend to do, a lot of times when I'm writing this material, I tend to get the charts on the day. Okay, I produce the charts on that day so people can see it on that day. I don't go back for like ages. I know some of the slides were a bit old. Some of the charts were a bit old, but all the new ones were taken today. I look for the pattern today so I can illustrate that pattern today. But maybe we could try some live trading. So we should show you some live charts and we can try and identify the patterns together. That could be good. The other question I have to ask is, like I say, again, this is for you, you great people. Like I said, I write these episodes and produce these episodes for you, okay, to help. Is there any topics or subjects maybe you would like me to maybe discuss and cover in the future? For example, a couple of months back, someone asked me to do a case study on gold, and I did a case study on gold, something which I'm quite close with because I traded myself. Someone else asked me to do a case study on WTI oil. I went off and did a case study on WTI oil and presented it. Is there any topics in the future which you might like me to maybe put together do it as an episode? Oscillators, things like that, anything like that? A live trade would be really good. I think so, Esteban. I think we should do that. I'll work on doing that. I think it's a good idea. So we can actually, maybe we do like a workshop and together we can all watch the charts live and then we can try and identify, maybe you guys can identify it before I can. So we'll do that. I like that idea. I think it's a good idea. Definitely. Is there any other topics, though? Anybody else like me to cover maybe in the future? Any other subjects? Cryptocurrencies. This is Esteban. Cryptocurrency is interesting too. Okay. Back in 2017, when Bitcoin was going crazy and it was all in the headlines and everywhere, I did an awful lot of coverage on Bitcoin and cryptocurrencies. I wrote an awful lot of articles, actually. I got quoted on it. And one thing I did notice, and I did quite a few webinars on Bitcoin and cryptos, And one thing I did notice was that some technicals didn't really work for Bitcoin. But what did work was the Elliott wave theory. I noticed that. I noticed a really good Elliott wave pattern with this was back in 2017. And again, this will help for the episode I'm doing at the end of the month on Elliott waves. That there was a clear pattern with Bitcoin with Elliott wave, and I did call. Pat myself on the back for this. I did know when I did see that there was going to be a level where it was suddenly going to start to really, really dramatically crash, and I'm pleased to say, on that particular occasion, I got that right. But yeah, if you're interested in cryptocurrencies, I haven't talked about it for over a year, which I'm glad about because I spoke and I talked so much about it in 2017. So much, in fact, I actually got really sick of it. I haven't talked about it for a long time, but yes, by all means, I'll do a case study on cryptocurrencies. Esteban, I definitely will. Definitely for you. No problem, my friend. Consider a done deal, my friend. We'll do that. That's definitely a deal. We'll do that. Is there any other topics or subjects people might want me to talk about or put together for them in the future? No? Okay. In that case, you have my contact details, obviously. So if you think of anything at the end, by all means, like I said, Esteban, my pleasure, my friend, my absolute pleasure. If you think of any questions later down the line, or we have any general feedback about tonight's episode, feel free to email me at james@strattonmarkets.com. Or, like I say, alternatively, you can contact me or message me at my Twitter. My handle is @Trescothick, or follow me if you like, because every now and then, like I say, I publish market developments, market news. And I do have a particular way of doing it. I do it in a quite comical fashion. By all means, follow me at my Twitter or contact me at @Trescothick, which is my Twitter account. Which will lead me to say, if there's no other questions or nothing else, can I just say a massive thank you to everybody. Big shout out to the Yo Alex 77 and Esteban. Thank you for your questions and thank you for your interaction. I love the interaction because, like I say, it does get quite lonely just me speaking to myself. So thank you for that. But also a big thank you out to all of you who attended tonight. I hope you found it useful and insightful, and I hope it's helping. Please feel free to rate this episode at the end. Be absolutely honest. Give me 5 stars. You loved it. Give me whatever you think is necessary. So on that note, can I say either a good morning or good afternoon or good evening or even a good night right now, depending on where you are around the world. Till next week, every single one of you, trade safe.